What is going on, everybody? This is Andrew from DeFiancy. So we had some major moves in the market yesterday during and after the FOMC hearing, and we're going to get into why. But first, I want to talk a little bit about some of the winners over the last 24 hours. And what you're going to notice is many of them are Ethereum darlings or Ethereum, DeFi primitives, or just have Ethereum in their name, as we will see with Ethereum Classic. So we have Lido, which is a liquid staking protocol, okay, which allows you to stake right now in the Beacon chain, which is the proof of stake chain, and also be able to borrow against that. No surprise to me that that's up. This is what happens in narratives, is people realize the narrative and then they try to go after tokens that are going to benefit disproportionately from it. And Lido is one of them, Synthetics is one of them, Uniswap, and Ethereum Classic, which is funny because Ethereum Classic is not Ethereum whatsoever. It doesn't really benefit from the merge whatsoever, but it has Ethereum in its name. So this just goes to show you that the market is geared for risk. People are wanting to put money back into risk assets, okay? And we're going to go into why. But first, or actually, yes, let's go into why before we go into the charts. So a lot of people are going to ask this question to themselves. They're like, hold on a second, how could the markets go up? This is the S&P 500 here. How could the markets go up if we're in a recession, right? It isn't logical for a lot of people. But what you'll realize is the market doesn't actually care, okay? The market doesn't actually care about a recession right now, really. And actually, it does care about a recession, but in a different way, okay? There was one sentence that Jerome Powell said during the meeting that made the algorithms that trade and traders in general go absolutely nuts and start buying. And it was this sentence right here. Basically, in a nutshell, what he is saying is that they are going to start to reconsider the way that they are raking heights right now, which means they're going to start tapering down in a way, okay? And that's all the market really needs to hear to start buying. Because at the end of the day, the market doesn't really care about really anything else. It didn't care about earnings. We saw that this week. The earnings were flat. They weren't horrible, but it just shrugged it off. It didn't really care. It didn't really move when Apple or when some of these earnings come out like Google and Microsoft. But you notice with the FOMC, one sentence about rate hikes, and we go up 10%. Now, people had front-run that move before, so a lot of the move actually happened before. Traders that thought that this would happen. But the surprise for me and many others was this statement, because I didn't actually believe, to be honest, that he would start to pivot his stance this meeting. Because inflation is out of control, I thought that he would at least have a pretty, what they call hawkish tone about getting inflation down, which he sort of did at first. I mean, a 75 basis point rate hike is no joke. But what he just said is that going forward, they're basically not going to automatically even have a rate hike. They might just not do one altogether. Basically what he's trying to say is they're going to take it decision by decision now. And I wish actually he put another quote up here, but effectively what he's saying is we are going to be, we're going to slow it down. Okay, I'm paraphrasing, but that's basically what he said, is that they're probably going to slow it down in terms of how fast they're moving along here. So the market can only really go up in that kind of situation because the market is not geared for that. Now, to be fair, people were gearing for this weeks ago. So when we started to have the little initial rally, a lot of people thought that this would start to happen, but a lot of people thought it would happen later on in the year, this kind of shift in attitude. Well, it's happening now, and there's also some other factors that when you add in combination with this really do create a bullish at least on the short-term environment, and that is we do not have a FOMC for August, okay? And CPI is likely going to be lower, or at least not, maybe neutral at worst, in my opinion, next month. And that's because the price of oil, crude, was lower over July as opposed to June. So that's going to have effects on the economy broadly. Goods, I'm not saying inflation is going to be terrific, but if it's even improving at all, you're going to see some excitement to get back into risk assets. And I think there's a very high likely, or I think it's there's a really high chance that could be the case. Okay, that's not financial advice. We could be wrong on that. But basically, the Fed changing their attitude towards the way that they are hiking these rates is what caused the market to go up. All right, and that has a domino effect. Okay, it really has a domino effect. And one thing I want to mention on this is, and this is kind of thinking a little bit deeper into this, there's a reason why. You may be asking yourself, well, why would he start to kind of maybe pivot a little bit or backtrack, his really strong stance on controlling inflation with rate hikes? Why would he do that? Because the reality is, deep down, they understand that they better be careful not to cause a serious recession, because if they do, they will be forced to turn the printer back on, which will basically be shooting themselves in the foot and will just create more inflation. So for them to be able to actually control inflation, they can't really create a real recession, because in a real recession, their job is to print money. And if they go and print money, it would just make the issue worse. So they do realize they got to be careful with how quickly they're doing this. So this is basically, honestly, the logical choice for them to do this. Now, don't get me wrong, it does delay fixing inflation. Like if they really wanted to fix inflation, they would have to raise these things a lot quicker. I'm not an expert on this topic, but I think it's just common sense. But they can't do it because they realize they'll have to print a lot of money later. Now, one thing I want to mention here, and he's even said this, I probably should have pulled this quote up. A lot of these rate hikes, the actual effects of them are not felt until later, like months after. This whole process is very sluggish. They go into a rate hike and then you feel the effects months later. So this is why I would be careful on thinking that it's going to be up only from now. Although in the short term, I do believe this is going to be, this will be a bullish environment. And we're going to talk about what that can mean on the charts here. So right now you're looking at the Bitcoin chart. I have two key levels here that I want you guys to kind of keep in your mind here. So around 23K roughly, which is the 200-week moving average, is the critical level that we had lost in the last video. And I want to apologize. I gave you guys the bearish scenario if we didn't hold this POC, which we did. But I didn't tell you what would happen if we did hold it, okay? And as a trader, look, you have to have multiple, scenarios outlined, because you might not be right. And as a trader, you don't have to be right. You just have to be prepared to take a trade, if something happens, right? Because we're not going to try to be, a person with a crystal ball here. We want to be prepared for each situation. And I didn't tell you guys about the bullish one. So that's what we need to go into here. This 200-week moving average is critical. If you go back in time, and I've shared this with you before, notice how we have kept this 200-day moving average for like a decade. If you actually go back here, you could see it a little bit better if I change the style of the chart. It's this bottom line. I mean, this is back in like 2015. Okay, we've held this average for a very long time. It's been used as a critical level of support in people's minds, and it happens to be at the range high. Okay, no coincidence there. So this range high I keep talking about, as long as we can hold it, which is, might as well just use it, say that the 200-week moving average, as long as we can hold that, okay, like on the daily, for example, and don't fall below that, the market is going to be bullish, guys. The market will be bullish. And this is a very bullish structure here. Now that we've actually bounced off, let me get my little drawing tool out. This is bullish. Okay. That's called a lower low. Okay. Or higher low, sorry. When you have higher lows, that's bullish. It wants to go up right now. Okay. Jerome Powell just gave people the green light to put money back in risk assets. So if we can stay above this 200 week moving average, what are we looking at? Well, I think minimum here, if things go well, around 28K. Okay, I could see this happening very quickly, by the way, because if you look, this is what's called a volume gap. There is nothing here. So price wants to react at these what are called volume nodes. Excuse me. Notice how they're like little, just think about them as points of resistance or support. There's really nothing here. Okay. So that's why you just blew past this on the way down, is because there's nothing to stop you from a volume node standpoint. Well, it also applies on the way up. So this could, and guys, I'm not saying this is going to happen overnight, but this could move pretty quickly. Very quickly. More quickly than most people think. And it's the way that these markets work. You have people that have been shorting whole way down. And if you don't know what a short is, basically think about it like this. As price moves down, you make money, but here's the thing. When you go and take profit on that short, you buy. So as you have traders that close their shorts, it inevitably causes the price to go up, causes more people to close their shorts, and it causes other people to FOMO in. And it's a spiral effect. It's a positive feedback loop. It feeds on itself. Price going up creates narrative, and it causes people to buy. Okay, they make a little bit of money as it goes up, and then they buy more. And this is what George Soros calls reflexivity. And maybe we'll get into that in a whole nother video, but that's a really important part of crypto and markets in general. Anyway, so this is the potential upside I see, but that doesn't mean that's where it's going to stop. Okay. It could be that we make it up to around 34. And the reason why I use 34, or around there, is because that's where the 200-day moving average is. And assuming that we have these favorable conditions, no FOMC, CPI isn't bad, there is no nuke dropped or something, right, with like Russia, Ukraine, and for the most part things are not really changing too quickly. Well, you could probably see a move up to this 200-day moving average or higher. All right. And I don't think that this would take very long, assuming you do get a real FOMO and interest with retail. Okay. So what does that mean for ETH? Well, ETH has already, let me get rid of these lines here. ETH has already jumped that gap that we just talked about. It has already moved up to its previous range low. But I could see ETH, and I don't want to make a price prediction on ETH because this could get really interesting. But look, the 200-day, I think it could get up to there as well. And that's like, 2,400. Again, not financial advice. This will not happen overnight. There will be many pullbacks, many deleveraging events that wipe a lot of people out, because these moves up, you get a lot of greed involved. I'm not telling you this is going to happen overnight, and I want people to be careful, because this will be a very over leveraged environment, because now people are realizing that there's a really good chance we could get some momentum, and you're going to have the gamblers come back in. So you do want to be careful and think about the bigger picture. But this is where I could see ETH going or higher. All right. Now, one thing I do want to talk about is some of these DeFi tokens. We really need to talk a lot about these DeFi tokens, because as you can see here, these DeFi tokens, they're not currently really moving at the same pace as Ethereum. Now, some of them are, like you saw Uniswap. And by the way, this is TVL. This is actually not price. So this is actually like total locked value. But the price of these assets are actually going up in proportion with Ethereum, okay, with Ether. Aave in particular, I think it was up 20%, same with Uniswap. It doesn't make a whole lot of sense for Ethereum Classic to really go up other than it has Ethereum in its name, but it definitely does make sense for Uniswap, Aave, Compound, Balancer, Curve, DYDX, Maker. It does make sense for these tokens too. And I'm talking about the Ethereum, the Ethereum native dApps, because they are the application layer of Ethereum. And we saw this last year. So Ethereum had an enormous move. It was like, it went from like 2,000 to 4,000. And as it started to kind of slow down, then a lot of these application tokens started to just ramp up. And I think you're going to see that again. At some point, these are going to actually outperform Ether once it starts to kind of top out a little bit. Or really, it might start happening before that. But typically, there's like a delay, because people are like, all right, I made a lot of money on Ether. What's next? What else is going to benefit from the narrative? You're seeing it now with Ethereum Classic. So, not financial advice, okay? But if we do get a pullback, and we'll make a video on that, or actually let's go over it right now. If we get a pullback, right? And I'm going to use Bitcoin as the example here. Basically, a pullback to this range high, or a pullback right before or around, this level here. So anywhere like in here, it's going to be bought up likely, assuming that these conditions that we're talking about stay in place. That is going to be a really good level to add, really anywhere in here. Okay, that's where I'm looking to start adding. I'm not going to FOMO in right here. Even if it goes up a little bit, that's okay, because I do know that as more people enter these assets right now, they get over leveraged. And just like how we have these short squeezes, that just like absolutely rip, and you're like, what just happened? When you're going up, the opposite occurs. You have what's called a long squeeze, meaning people that are getting over, they're getting greedy, they're getting into longs, they get liquidated, and it causes price to go down. But these are going to be the events that I'm going to be really interested in adding. Okay. Anyway, I think that's all I really want to cover today. We're going to be talking a lot about some of these tokens. Like I said, Uniswap, it's up 24%. And that's before we started the video. You're going to continue to see these things rise. Hold on one second. I actually want to see. Yeah, so 24%. Aave, 12%. So not quite at Uniswap level. But I think you're going to continue to see these things go up. So we're going to start covering these tokens a lot closer. And until then, happy hunting, friends.